The next part of why this trade shouldn't have been taken under normal circumstances, we're talking safe now, is except for the fact that it was entered over here, it was between a narrow sideways, which is the area that we call scalping. And this is an area that is very dangerous because the points locked in is so very, very narrow. It has broken through that now. Let's put that behind it. But at the time when this trade was taken, it was in scalping area. It's gone above it a little bit. I'm happy to take the next opportunity. If it works out, it works out. If it doesn't, it doesn't. The way that you manage it, if it doesn't work out and it pulls back on you, then you deal with it by climbing out at a point that you feel comfortable with. There's no point in marrying your position and then hoping for the best. Hope is a good thing to have because it drives you to be better tomorrow. But when it comes to trading, you're placing your hope on other people, other traders that you don't know what their poker hand is. You don't know what their idea is, what they're going to, how much money they're working with, which direction they want to go in, how they're managing their clients' portfolios. So let's say my cutoff point is 100. That's where I'll say, okay, I'm not going to risk stuff until it gets to 100. The difference is between me just risking and hoping. I need to do a bit of analysis. I say, okay, from there to point down to that support over there, which is now an intermediate support, so another 43 points from where the 60 odd was. I'm going to rather just let mine run to round about there, which is just shy or just over of 100 points. It might just go and look for some support over there because a lot of the time frames have gone above that. It couldn't break through on certain resistance levels. Now it's just going to go down and look for this the common support. Remember earlier on in this morning's trade how this was resistance and everything struggled to work through it. Then divergence broke it through and it was happy. Now the time frames are going looking for support. They want to have convincing evidence to say that if I go ahead with my current direction, I'm going to have the support of someone, and that someone might just be this intermediate support over here. If it goes beyond that support and it just keeps on going like it's doing right now, I need to make a decision whether or not I want to climb out to safeguard my points, safeguard my account. What I'm seeing right now, for instance, on the lower time frames, is that the price has gone down to almost to T2, T5 on the lowest of the time frames. And the reason I've got this open is I want to see if the price turns against me, where is it heading? And if it heads there, is it going to turn? If it doesn't turn, then I'll use that, my lowest of the lowest, to, along with maybe the 5 minute, to see whether my direction has been broken. If I bring in what we normally work with, which is my 5 minute, and I have a look at it, yes, the price has gone down, yes, it has gone past that intermediate point, but has it broken T1, T0 yet? No, it hasn't. Should I be freaked out? No. Should I be wary? Yes. So let's have a look and see if this continues, and if it does, make a call. It sometimes runs. You see how it just spiked right to there, just above T1, T0. Let's see where it goes. If it goes further than that, then we know there's a price. Then the direction change is continuing in terms of the general direction for the trade so far today has been, or not today, but the general trade so far has been a short. And when there's a pullback on a general direction change, you very often see that it goes to T2, T5, and then it changes. But just by making an educated decision and not an emotional decision based on where we are going, I've managed to keep myself from jumping out when it was at a minus 162 points, saying it tested T1, T0, which was around, where is the, there's the 5, which was just under T2, T5 on the 1 minute, and it was on M8 on the 15, and all of those things are an educated decision. Yes, it is going down again, and I can decide now, is it doing too much of one thing? Maybe do I want to get out? Let's see where I want to go. If I look at the 5 minute, the 5 minute technically for me right now is in a technical sideways. If you look at the size of these candles over here, they're more or less running in the same range. That one had a high over there, which incorporates all of that. That support is over there. So this thing is testing that support, then it's testing a high that it's reached somewhere along the line. We don't know what it wants to do. This is what a trader does when he's trying to calmly, almost like a robot, emotionless, try and make educated decisions based on the information that his system is portraying for him at the moment. If this price drops, I'm looking at the 5 minute now, because the 1 minute so far is in a sideways. Now normally we don't trade with the 1 minute. I use the 1 minute as a tool in times of crisis to better educate me. But the moment that I'm out of crisis, my 1 minute goes away. I switch it off. The main reason for that is your peripheral vision gets hijacked by your subconscious, and it pulls in information and it says, this is not good. It's going for that again. Luckily, because it was against the trend trade, I decided not to risk all my contracts. In actual fact, I'm working with a 10th of what I would normally work with, so I don't have that exposure to lose too much. Sure, this has been going for a long time. We're at almost 8 minutes now that this has been plotting along. We'll get back to this.